You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is noon Central. It is 1 p.m. Eastern. Do you know what's cooking in these crazy markets? Well, let's find out together, shall we? It is time, once again, for everyone's favorite bi-weekly Options Palooza, known around the globe as the Option Block, what the cool kids call the old OB. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network. Hopefully all of you are enjoying this week, this year, this past nigh on 17 years. Crazy how much content we put out to you folks out there. If you like any of it, remember, it's all still there for you. We don't take anything down. If you like any of it, throw a rating, a star, a like, a comment, all that fun stuff at the end of the day. It does help people continue to discover the I think we have enough bandwidth for the other people who are coming on. We'll see. We're already chugging along on a lot of bandwidth, but we already had to years ago switch away from running the network on our site because it was breaking it. And now we have a fun network provider that can handle the load, even though we are testing it a little bit. So let's keep testing it. Why not? What the heck? Bandwidth, there's more where that came from. So if you like what you hear, throw a rating, a star, a comment. If you want more in your lives, you want, I don't know, an awesome pro Q&A like we did with our old buddy. Used to be on this show quite a bit with us, the last emperor from running the options active trader strategy desk over there at Fidelity. Tackling all your options queues over there. You want options oddities, after vol views. You want great giveaways. Remember, coming up, it's the 28th. Get your name in the hat now to win the March Pro Trading Crate, theoptionsinsider.com/pro. The place to go to learn more as we learn who's joining us on the program today. First, let's go out to the quiet, the sleepy, some might say the dead to the world hamlet of St. Charles. All they have is a fairground and a Skippy's Gyros, which has yet to cut me a check for all the plugs I've sent their way over the past decade. But I'm not bitter at all, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. How go those deadbeats at Skippy's?
They're the people at Skippy's. All good out here in St. Charles. Always a pleasure to be on the option block.
Are you recording from the middle of the fairgrounds right now? Because that's what you do in St. Charles, right?
That's what we do. It's like we have the listening parties. We're about 8,000 strong today. It's a little bit lighter crowd today because we got the holiday weekend. We normally get about 20 to 30,000 people watching us when we're recording the option block, though, typically.
I think you can fit them in the Rabbit building. Maybe not the Stair building. That one's a little bit smaller on the old fairgrounds. I have been there once or twice. Might be coming back there at the end of April. We shall see. As we keep on rolling and go around the horn to the dark, the stormy, the nightmarish shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. Rock Lobster, welcome back to ye old OB, sir.
It is a pleasure to be here now that I have power and I don't have multiple death-defying broken branches hanging from trees.
You had to flee to the Cape. Oh, you poor bastard, fleeing to the resort area of the Cape.
Yes, it was rough, but I did it. I survived.
That's like saying I had to flee a disaster and go to South Beach. I just had to. Or Vegas, yes. I don't know.
I believe you do that every year for what you just say. I just go to FIA, but we all know what you're going for. You don't. Listeners know. We know.
FIA code for Miami and South Beach in real life. Yes.
Code for Miami and Mai Tais.
That's what I'm doing over there. And also joining us, fresh from a conference overseas across the pond, so he's had his fill of bangers and mash. I do believe they have paid the internet bill over there at CBOE. Let's see if he can hear us. He is the FLOWMASTER himself, Mr. Henry Schwartz from the aforementioned CBOE. Welcome back, Governor. How was your trip across the pond?
It was really nice, thank you. I didn't have bangers and mash, nor did I have fish and chips, but I did go out for Indian curry twice.
Some of the best curry I've ever had has been in London. Yeah, it's pretty good. You can't go wrong with a spot of curry over there. What was the conference? Anything fun? Anything you want to share with our listeners?
So Bloomberg had a volatility conference, and I was on a 0DTE panel, which was very interesting. And the moderator kind of came at it from how are these products going to cause the next Volmageddon angle? So I was more than happy to kind of show explain what the data shows, and it doesn't stress me out. And then we had a fancy dinner for some hedge fund clients of ours. And I got to see a bunch of our CBOE team members over there. So it was a great trip.
Apparently, everyone's just bracing for Volmageddon 2.0. Just the article in the Journal this week, not even about 0 days, just covered call funds are going to give us Volmageddon 2.0. So everything apparently puts us on the cusp of Volmageddon 2.0. Maybe we'll get there a little bit later, listeners, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, welcome to the Trading Block, the portion of the show where we break down, surprise, surprise, what the heck is trading out there. Today, of course, the final trading day of this truncated holiday week. So, of course, we'll be off for the Good Friday holiday tomorrow. No shows tomorrow, no oddities, no vol views. I'm a nice guy. I give the Rock Lobster the day off out there. Nice fellow that I am out there. Don't worry. We'll cut together some content for you on the vol views feed. You won't be left hanging out there at the end of the day. What is leaving us hanging right now are the markets today. It seems like everybody is off doing something else. Nobody can be bothered to move a share or two because the Dow just ticked. It is literally unched 0.00% on the day. S&P up a whopping 0.04%. And the NASDAQ off about 0.17%. They were all pretty much green most of the earlier session. Not a lot. A little bit up slightly on the day. Looks like they're giving some of that ghost back now. But we shall see if that continues. still hanging out right around almost exactly at that 52.50 level, listeners. So not a lot of evolution. Again, we're heading into, say, the end of a truncated holiday week. So not a lot really to be found on the tape out there. All that a long way around to saying our old friend VIX almost literally unched at about a 13 when we kicked off the show, down about 0.15. It was looking lower. The Rock Lobster and I were counting our winnings on those juicy April 13 puts that you listeners forced us to buy on vol views and option oddities last week. We were up a whopping 3 cents. We were just raking it in. We're still up about a penny now. So we're still up. So nana boo boo to all you listeners who said sold to you. We're still making money, but yeah, not quite the bonanza it was earlier in the day. We shall see. We shall see how this continues. Hopefully they come for vol very aggressively at the end of the day. And those sweet VIX puts are going to be a 2xer by the end of the day. What do you say, huh? VVIX looking pretty anemic. 76 down a point. Again, we're getting back to that territory. 75 is usually that level, listeners. You hit 75, it's usually you don't hang out there for too long. It's also usually a time when you don't want to blast away on a bunch of vol because obviously you're not getting a lot of reward, not a lot of bang for that buck. Hence the loading up on the April 13 puts. Is 13 a bridge too far? We debated that last week. I guess we'll all find out together. VXX, 13 looking pretty good in VXX at a 12 3/4 when we kicked off the show, down about a 1/4 of a point. UVXY 610 down 0.2 of a point. If you want to hear us debate the, I think to put it charitably, meager reverse split they have coming in UVXY, then by all means check out the episode we just did with Jim Carroll on vol views last week. SVIX 43.10 up about 3/4 of a point, and UVIX 845 down about 0.3 of a point out there. So a whole bunch of nothing really to kick off the show. You know what? I forgot. I neglected our friend Small Caps. How dare I, listeners? Because Small Caps earlier in the session were actually putting up some volume numbers. So let's see what our old friend Small Caps is up to. They're up about 0.5%. So they're actually delivering. They're off their highs a little bit up earlier in the session as well. So Small Caps, again, kind of doing what they want to do out there. As we go around the horn, let's go back. Let's start the opposite of the way we went. Let's go out to CBOE East first. Mr. FLOWMASTER, sir, while you're busy finishing off your last piece of curry over there, what's been catching your eye out there in a mostly kind of tranquil week?
Definitely a tranquil week. I mean, today is a synthetic Friday since we don't have to trade tomorrow. It has been kind of tepid. The volume actually at the first half a month of March, we're averaging about 50 million contracts a day, but things definitely slowed down. The market's kind of really just kind of gone sideways for a bit. I think we had a solid up week, and then we've had kind of a sideways week. So today, as you said, looks like it's going to be flat as a pancake. So it's it's just kind of maybe it's the as we head into spring, things are going to kind of quiet down. Couple spots there of interest that we'll get into in the odd block, but overall, VIX around 12. As you said, it's just not. There's nothing too crazy going on. So it's kind of a nice period to do some stock picking and kind of put on some trades, and it doesn't seem like you have to worry about some of these real crazy swings, at least for right now.
We're coming into the end of March as the duly anointed FLOWMASTER, sir. Do you have a sense, is March going to be up from a year ago? You said the second half has been kind of weak, so are we looking kind of flat? What are we looking at?
You mean in total in volume? It'll be up
overall
over
volume.
Last year. Yeah, it'll be we should be up about 8 or 9% over last year. So it's still a very strong month. It's just that when we started off above 50 million contracts, that would be historic. Looks like we're going to kind of, the month is going to average around 47. It'll be a busy day today. Quarter end is always an active day. Usually we see that the ginormous roll in SPX. So everybody's kind of waiting to see that hit the tape too.
Yeah, you can't sneeze at 47 million contracts. It's not 50, you're right. 50 would be a banger pace, but still 47 million contracts. Just a few years ago, you and I would have laughed that out of the room if someone suggested that to us, 47 million contracts a day. So certainly nothing to sneeze at out there. And the Rock Lobster, he's no longer sneezing because he has power. Maybe he even has a furnace. I don't know. Maybe all of his tech woes have been solved. Mr. Rock Lobster, what's been catching your eye out there in this mostly gently drifting market, sir, except for small caps?
Yeah. Right now, I'm disparaging York. They're the furnace people that apparently cannot make this part.
Are they still screwing you over, the York
We're still
folks?
talking about the furnace?
4.5 months.
He does not let go of a grudge as a rock lobster. You will learn
However, I can buy a new one for $24,000.
It's very charitable.
Just buy the new one.
It's very charitable of them, sir.
No, because the replacement part is under warranty. I will not. I will not. I will not give them the money.
He'll teach them. His whole family will freeze to death, but he'll teach them.
Yes. So Henry's like, why do you know, because you live in New York, you don't have a coal stove. You're stuck with your furnace. See, I have options here in the woods to buy the furnace. Anyway, I'd rather complain about it until they actually deliver it to me. So, what's going on? Who knows? Like it's days like today, I'm glad that, I sell some puts every once in a while and I write calls and have that kind of, a little bit of flow coming in to make a couple of bucks because we sure aren't going anywhere. I think the biggest thing catching my eye is like what sparked that rally at the end of the day. So when Henry brought up the 0 DTE, we kind of had that like wicked sell-off on Tuesday, last 20 minutes of the day. Like somebody, is it like a new guy that all of a sudden realizes they're short a bunch of options and all the game they have goes away and they got to just knock out a bunch of futures. And then yesterday we had, almost a 1% move from the bottom, like 0.8%, and like 30 minutes. It was a rocket ship. So I think all of those are pretty surprising. Again, we had very flat days, and then the last 20 minutes of the day, somebody got excited. So I would say from a trade point of view, that is a little bit it's off-putting. But other than that, the next thing I would say is the 1 week resurgence in kind of the gold miners, silver miners, all that kind of stuff, starting to make a little bit of a move here as the market is looking for, okay, maybe there might be, the inflation thing is not over. We have a PC deflator next week. I think that is another thing kind of keeping volatility up. Like why VIX isn't 11.25 by now, I don't know. Of course, that would thrill me and Mark to no end. But, the realized vols are in single digits. So we're starting to get to a lower volatility for longer. And that generally brings VIX down a little bit. But we haven't really hit those lower numbers in a while. What was, usually you get single digit vol every 10 years. It just takes a while to sort of get down there. And that's kind of where we are right now. So, and overall, I think that's kind of, overall market bullish. And I think people are starting to look to the elections. I think someone is kind of creeping in, but who the heck knows? That like all of a sudden elections just got crazy. It used to be just, an election. Now it's just crazy. Like what's changed? I don't know. But everybody's just crazier. But there is that huge vol bulge in the October contract, and that's not going away. So I think, at least from a volatility point of view, once you sell that contract, hard to get it back. So it's going to stay there for a while. Anyway, and that's kind of just what I see. So we got low vol and, market going up with some really weird crap happening at the end of the day. And that's all I see right now.
A whole bunch of weird crap. Let's see what Uncle Mike has to add to that from his perch in the middle of the Kane County Fairgrounds. Mr. Uncle Mike, sir, was catching your eye in a mostly, looks like we just tipped red again, mostly, though, Uncle Mike type of week.
Yeah, I think no doubt we had a mostly Uncle Mike type of week. That's definitely happy about that. I mean, I think with it's the type of market today to where we can talk about Andrew's furnace for extended periods of time, and it's that kind of market where that's what's going on at this point in time. So not a lot, of course. I am surprised. I would have guessed going in today we could have seen a little bit more window dressing. We're at the end of the quarter right now for certain stocks, but for the most part, nothing's really extremely lighting up my tape by any means. But maybe that was what yesterday's rally was all about at the end. Who knows? But I think that on a day like today, you just reevaluate positions and make sure that you have your hedges in place and your premium sold in the right spots for how you feel going into next quarter, because you don't have to worry about, I shouldn't say you don't have to worry about, but there's the odds of drastic major movements happening are much less on the day before a 3-day weekend like we have with Easter coming up. I'm curious to see the Trump effect throughout this election process, in that one thing that, and I'm not trying to be political, but one thing that I did enjoy about the Trump presidency, once again, I'm not trying to be political, is the fact that he could say, and this is pre-COVID, he would say stuff along the lines of, you know what, I'm going to raise the tariffs, and the market would drop. And it would stay down for a day or two, and then you could buy that dip, and then he'd see that because he was he would actually look at the S&P and talk about it publicly, and then he'd see the market down. He wouldn't like it. He's like, nah, I changed my mind. Then the market would go up. And so the Trump tariff announcement game is something that I definitely miss about the early days of Trump's presidency. And I'm curious to see if now that the market knows that that's something that happened, I guess I should say, if during the election season, if he's leading in the polls, because he'll be up, he'll be down against Biden. That's just the way all elections work. But if he's leading in the polls, if we can have something like that happen before, if he were to be elected. So Andrew got talking about the elections, and yeah, I think they're a big deal, of course, and we'll definitely see where we'll go with it. But I want to see how the market's going to react this election season to just political rhetoric by either Biden or Trump, because I think that that's just, in the Trump presidency, it showed that that was a lot more relevant from what I could tell back then. I'll be curious to see if it is going forward, and that's what I'm seeing today.
And, we're not seeing a heck of a lot of volume, so instead I want to get everyone's thoughts really quickly on something that's been percolating a lot on our network, and certainly in VolTwit and on FinTwit, and indeed in the broad financial media of late. A lot of outlets running with this topic, which has been effectively the explosion of AUM in covered call funds, going from about 7-8 billion back in 2020 to now about 80 billion in AUM. So these have exploded. A lot of people starting to speculate that maybe the preponderance of option selling, again, mostly covered call selling through these funds. Not a lot of these funds blasting out on puts, even though there are a few out there. But this preponderance of call selling is what's keeping vol down. I think Mandy over there at CBOE came out with an interesting report a couple of weeks ago. We discussed it on Vol Views, kind of rebutting that, saying if you saw that, which does make sense if you think about it, if you saw a preponderance of call selling, you would expect to see the call wing annihilated, and that is exactly the opposite of what we're seeing right now. The skew for the single names and indeed for indexes is threatening 2021 meme stock level. So not exactly an environment where everyone and their mother is blasting away at upside. Also, the volatility risk premium, you think that would have been crushed to death, and that is not the case as well. So two very meaningful data points, I thought. That seemed to be kind of case closed to me. Then, of course, the folks at QVR Advisors, Scott Meidel and them came out. They've been on our Vol View show a few times last week with their own report, kind of rebutting that and saying, no, unequivocally, it is covered call selling funds that are killing vol out there, and having some of their own data to kind of back that up. And then to add more fuel to the fire, the Journal coming out with an article this week, going back to that same well, kind of highlighting the growth in AUM of these funds, talking about, are they the culprit killing volatility, getting a lot of people to chime in, point, counterpoint, also adding in an interesting, some might say, absurd addendum. Can these covered call funds, are they also, because they are net selling vol, are they also going to lead to a Volmageddon 2.0, a reprise, if you will, of what we saw back in 2018, somehow tying a covered call fund, making it analogous to an inverse VIX fund like XIV? Kind of a bit of a bridge too far, if you ask me, but I'm curious. I've talked about this already this week. I'm curious what everyone else thinks out there. Let's go out to CBOE East first. Mr. Flowmaster, I have a feeling I know what you're going to say because your colleague Mandy Zhu kind of kicked off this whole debate with her little research paper there. But what are your thoughts? Where do you fall? Are covered call funds killing vol? And also, are they going to take us off the edge of the abyss to Volmageddon 2.0, sir?
I love kind of what Mandy puts out, and yeah, it's pretty amusing because there's one of the Bloomberg headlines went by saying that there was a feud going on between the J.P. Morgan analyst and CBOE analyst, which was Mandy, about the cause of
Mandy, that hot-blooded lady out there, just taking shots at everybody.
Exactly. So, I mean, there definitely is a wave of these premium selling products. This is not really a new situation. Some of these have been around for years and years, but there's definitely been a pickup in product creation. You hear about all these, QQQY and IWMY, and then they even have them on single stocks. And there's definitely, sometimes I call it a gold rush in the ETF creation business in these products that sell options. However, even with a big pickup, I think Matt Moran from CBOE had a chart on the growth of option use in 40 Act funds, and that assets were close to like $60 billion now. But it doesn't actually translate into that much premium for sale. In fact, if you look at there's one that I follow, QQQY, which basically sells a one-day put in NASDAQ every day, and you can actually, if you look at the trades in the last 5 or 6 seconds in NDX, the index options, which are really not super active products, so it's kind of easy to see. You'll see basically a 70 lot being sold every day around 359, 52. And it doesn't add up to a ton of Vega for sale in terms of this vol dampening situation. And Mandy's is spot on in terms of, what we're really seeing is not just low volatility, but very, very flat put call skew, meaning puts are really cheap historically versus the at the money vol, and calls are really expensive versus at the money vol. And these premium selling funds, most of them are callers, right? So they sell some sort of an out of the money call, and even that giant roll that we're going to see today in SPX is a put spread caller. So they sell a call and buy a put spread. That is also a premium selling, a Vega selling product. But exactly like she said, you would expect to see the call wing actually really depressed. And what we're really seeing is she's done some great work, and it's very cool. She's kind of inspired me to dig some stuff up. But one of them is basically just looking at your volatility on up days minus down days versus down days. Separate it out. Don't just say, okay, SPX is realizing 10 vol, but say, well, let's look at the down days and let's look at the up days. And it's very clearly, mathematically, the up days have been bigger. They've been more volatile to the upside, which is really kind of abnormal. It's not how we were trained to think of the down days as being the scary days. And that absolutely translates into the kind of the volatility structure that we're seeing, which is basically there's not a lot of fear out there about downside moves, and we're not actually getting the downside moves, so it all makes sense. And we are seeing some pretty violent, moves to the upside, and that therefore you're going to see basically those calls are very dangerous to sell effectively. So people, people price them a little bit higher. So, I absolutely do not think, and I told the Bloomberg panelists in London that these products are leading to anything dangerous. None of them are levered, right? You don't have the TVIX kind of unwind potential, right? You have products that may be selling volatility as part of the strategy, but it's basically kind of 1-to-1 with the notional value. So if we get a big volatility shock, they're going to lose money, right? These are short vol products, but they're not going to go down to zero and then get liquidated. They're just going to take a hit, and and literally, if you look at the performance over the last 6 months or a year, it's really very good, and that's pulling a lot of people in too. I think the danger is that what we need to make sure of is that people really do understand the risk they're taking. So because sometimes, especially retail customers, look at something with a really high dividend yield and go, oh my goodness, this thing's yielding 30 or 40%. And they want to put their money in it because they think they can live off of the dividends. And when that yield is being created from premium selling, it has the potential, and over the long run, eventually it'll happen. It has the potential of losing a lot of value very, very quickly. And that's the one thing that I kind of worry about.
Yeah, a lot to unpack there. I'm definitely with you on the whole Volmageddon things. I don't know why they even put it in the article. It seems like it's apples to violins. They're not even the same thing at all. But that's a conversation maybe for another day. I want to let anyone else who has thoughts on this chime in. Maybe because it's interesting and we have no vol views tomorrow, I'll have our editors cut all these debates we've had this week together into maybe a special edition, a special report of vol views. Uncle Mike, Mr. Rock Lobster, any thoughts on this? Are covered call funds killing vol A, and B, are we headed for Volmageddon, easy for me to say, 2.0 as a result?
Well, I mean, I think that when you're doing a covered call fund, because we have an SMA that we use, we call it the triple income. And whenever I'm talking to clients about it, you got to be very careful about promising income. And in the stockbroker class 101 or whatever, and all the series 6 and series 7 and all those tests that I took a million years ago, one of the things that they really pushed is that if you're pitching a mutual fund, you can't sell the dividend. Meaning that you can't say, oh, this is going to have a dividend coming up soon, so you should buy this fund. Because of the fact that technically, whenever there's a dividend, the value of the fund goes down by that amount. Now, of course, it can come back, it can go up, it can go down, whatever. But because the dividend doesn't make it a better thing. It can, but that's just another tool for it. And by the same token, whenever you're pitching covered calls to clients on how great they are, they do this, that, or the other, you've got to be very careful about not saying, oh, this yielded 8% last year, 10% or 12% or whatever, because of the fact that just like in the dividend world, the dividend might go down and you might not be able to do it. And in the covered call world, well, volatility may go down, so you have to be careful with it. The problem that I've seen a lot, more so in the dividend world than in the covered call world, but I think it could be coming to the covered call world, is that even though you can't legally sell the dividend to people or pitch the dividend to people, it gets done. And my concern with all of this additional AUM going to covered call funds is, number one, people aren't going to know what the heck it is. But number two, just because you're able to get a certain yield on covered call premium one year doesn't mean it's going to happen the next year. And then what'll happen, my concern is that people are going to start selling in the money covered calls, so that way they can continue to get this yield. And that doesn't give you what you really need, because you're selling intrinsic value and it's not really helping what you originally were trying to do overall. Now, if you're selling in the money covered calls, there's nothing wrong with that. But if you're using that as a form of income, that can be a problem. And so I could see it being a problem if, and only if, covered call fund managers have to start altering their strategies because they get pressure from management to create that yield in one way, shape, or form. Or they start buying stocks that are way too volatile for what they were originally trying to do. I could see problems happening that way, but I don't see it happening just because of the covered calls themselves.
Mr. Rock Lobster, the final word, I should say, is yours if you would like it, sir. What are your thoughts on this whole debate, sir?
So they're saying that the covered call fund could blow up. I mean, they're just buying stock, right? And then they walk some calls against it.
Yeah, that's pretty much it.
So unless everybody hits the exit, right, on their covered call fund, but they're not going to do that till after they get their statement. You know, they realize, wow, you know, because a covered call is just a short put. So and mostly they're supplying vol to the marketplace. So as X market maker, okay, you got these call riders coming in like crazy, and it just makes you massively backspread. So the market falls apart. Not really a problem for the liquidity providers, so they're usually have to buy stock back. And the covered call riders generally are not going to buy their calls back at all. They're going to keep their stock. It's going to suck, and then they go look for another calls to sell. So I could see how it adds liquidity, just like all call sellers do. Would it dampen vol somewhat? I would say yes from the supply, but judging from the amount of vol being sold, I don't know. Now, the difference would be are they selling these calls? Are they writing against VXX? Because even then, vol, so I guess it depends where they're writing the options. But I don't see how a covered call fund by in itself is going to create market liquidity problems, because all they're doing really is supplying puts to the market, which is not a big problem. So I would kind of err on that side, that I don't see how they're creating problems. I think the problems will be when the market actually goes down. You have a quarter that might be down 10 or 12% or something, and everybody sees their covered call fund, and the covered call fund will do better than the S&P 500 in general, because at least they have the short calls that they sold that went on worthless. So I don't know. I guess maybe it's just an excuse for people to be angry about something.
Yeah. Our chat's not buying it either. They're saying Wall Street Journal is crazy. They're looking for clickbait with Volmageddon. Probably a little bit of that as well. People click on things when you put Volmageddon in the title or in the article somewhere. So it is a bit of a leap. The better debate to be had around whether or not these covered call funds are killing vol. I do, again, think the data points of the call skew and the volatility risk premium kind of put that to bed, but, this debate persists nonetheless. So we shall have it here on the show. What we're not going to have on the show, listeners, is a whole bunch of volume, really. VIX right now, 287,000 contracts, so whopping nothing. SPY, 4.4 million, so about average. S, 1.55 million, so again, kind of average. Only real outlier today are the small caps, 1.27 million, so more than a day's worth of volume. So small caps lighting it up out there. Q's 1.85 million. Also kind of in the toilet as well. Single names only cost you 209,000 contracts to break into the top 10. That gets you to AMC. That's not a heck of a lot. AMC number 10. Number 9, our old pal Disney, 221,000 out there. Number 8, Meta, 228,000. Number 7, it's Palantir, 374,000. Number 6, the newest member of the Dow, the Amazonians, 417,000. Number 5, it's Mara, getting some crypto back in the top 10 again. 430,000 contracts. So Mara popping off out there today. Let's just look really quickly and see where Mara is hanging out right now, listeners, and we'll get to the old block of oddities here. While we're waiting for Mara and for my system to catch up here, there we go. Up about $1 or 4.3%. Not a huge move, but it's trading 23 again. I think it was just 15 or 16 bucks not too long ago. Number 4, it's the fruit company, 571,000. Number 3, keeping it in the A tech names, it's AMD, 665 on the tape. Then we jump up quite a bit to number 2, almost 2x. NVIDIA, almost 1.2 million, 1.17 million. And the big dog yet again, Tesla, 1.51 million. If you come for the king, you best not miss. And it seems like they missed today. But we won't miss the odd block. So let's get to it.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. And before we get to the FLOWMASTER's batch of weirdness for this week, we got to pump the brakes, stop the presses. We got some breaking news out there in a product that I know is near and dear to the heart of the FLOWMASTER. In fact, he has changed his license plate to Nano Man 1 because he is so committed to the cause. He's been on here, kind of been the sole advocate for nanos for quite some time, but it seems like, Mr. FLOWMASTER, all your hard work, all your advocacy is paying off. What did we see go up for size out there, sir?
Well, you are right. I am a fan of the nanos. I may be the only fan out there. I'll tell you though, it's traded about 7,500 contracts today. So
I was gonna say clearly somebody else. There's at least two of you out there. Somebody else is trading it.
Somebody else is trading. So no, I pasted you. I actually did look up on the New York State DMV license plate checker to see if it was available. And Nanoman is not available, but Nanoman 1 is available. So I'm thinking about it. But the trade I pasted to you really was just kind of an interesting one. It's it looks like somebody legged the today expiry 524, 526 call spread. But took basically a couple minutes between legs, and they ended up selling that call spread for I think $2.04 or so. So on a $2 spread, and it's cash settled index option. So we know that literally can only be worth $2. And so it was just one of those trades that kind of looks like a layup. I'm not sure if the pricing was out of whack, or they just got lucky in terms of the market moving. But that was just the one. I really do think nanos are available. I know on Fidelity and Interactive Brokers because I've traded them through both. These are simply SPX divided by 100, so you get a level around 525, very close to the level of SPY, and then it's a multiplier of 1. So if you see a $4 option on the screen and you buy it, you pay $4. Which, when it was created, the idea was basically you could have people start to get their feet wet in options, for less than the price of a Starbucks coffee. So I still think they're an amazing learning tool. You can really experiment with things, and the P&L, could be $10, $15 at a time. So you don't have that fear factor of, even a 30-cent call, if it has 100 multiplier on it, $300. So I like these, and I wanted to give a plug for the nanos because there are days where they're pretty active.
We have not talked nanos in quite some time, so they are probably overdue for a plug. What is not overdue for a plug is all this madness with the Truth Social and all this fun stuff. But nonetheless, it has been driving a little bit of interesting flow, which I know is your bailiwick, Mr. Flowmaster. I know you enjoyed holding court on that tender offer a few weeks ago. A lot of people enjoyed that as well. So I guess we're due for another tilt at that windmill, sir. What caught your eye out there in this whole DWAC brouhaha, sir?
So yeah, I'll tell you that tender, that ATMU CMI tender, for anybody that did it, if they didn't hedge it at all, turned out to be almost like a $5,000 winner. At first, it was only a $2,000 setup, but oddly, the target stock went up during the period where you really couldn't trade out of it. And so
That's
people
nice.
got stock, 1,200 shares of stock at around $22.50, and it was at like 26.5. A few days later, I think it's at 31. So that was kind of a crazy one. I've never actually seen it work out that well. So DJT I answered several questions on it yesterday, and the Journal, I know, picked up a story in it. The SPAC, which was DWAC, Digital World Acquisition Corp, I think it was called, has been around for a few years, but the symbol just changed this week to DJT. So, when a SPAC sits around as a SPAC and is simply there to acquire a company, basically merge with a company to kind of do it as a reverse listing. And although everybody knew from the beginning the DWAC was basically intended to become Truth Social, it finally happened this week. So I put out some charts basically just showing, kind of how the volume exploded this week. It was actually very busy in 2021 when it was initially listed, but that kind of makes sense because the SPACs in 2021 were part of the meme stock craze. And so, what we're looking at today, basically, the other thing is you have all the headlines, right? Trump is in the news. He's very good at that. It's the fact that the name recognition is so high. Basically, we've seen option volume around 300,000 contracts a day. over the last few days. I mean, you'll love this. It's one of these. It's a incredibly hard to borrow stock. I actually printed out the. You really can't short it if you try to do it through a broker. It's just not available. And if you look at what the options are pricing in, basically the forward, right, the put call versus the stock is effectively like a forward or like a future going out in time. So currently with the stock around 61, the forward is very underwater. If you look at the April expiration, right, which is a few weeks away, it's at $50. And so what that implies is a bar rate of around 300%. So you're basically talking 50 cents a night to be shorted. And then just a lot of action. It's also, trading around 250 volatility too. So just lots and lots of action in there. Seems to be pretty retail. I don't see a lot of firm activity. But we do see some pretty big trades. It's also one of these, with the stock trading around $60, I think that's something like, 15,000 times earnings or something, right? It's not a company that makes any money currently. So it's a fun one. Some people think that, basically given, that he's got his name on it, it could go to infinity. And other people saying this, it's not really worth anything and the stock should be at a few dollars. And in the meantime, it kind of trades around $70 and has a lot of volume.
That it does, Mr. Rock Lobster. Anything to add there, sir, on the whole DJT drama from this week, sir, before we keep on rolling?
Speaking of, just on a kind of a goofy one, Sam Bankman-Fried got 25 years. Yeah,
got quite the hit. I don't know why you went there from the Trump thing. Are you implying something?
Well, I know there is some. I'm just reading the news. The Trump thing is funny. You know what? It's like anything else, like some funky speculative issue. So, who knows what Truth Social will be worth or what the conglomeration is or whatever. But all I know is that it's been trading like crazy and will probably trade like crazy for the foreseeable future. With activity likely dropping off after the election, maybe one way or the other. We'll see. Depends, I guess, who's in office. So, but yeah, that came across the tape, and I would have swore the guy was not going to get more than a couple of years, but apparently they got the right judge.
No, they wanted him. And that girl rolled over on him pretty darn quick, and she knew where the bodies were buried. So he didn't have much of a chance as we keep on rolling and go into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Got to kind of breeze through these because we're already coming up against it. Had fun debating short calls and their impact on vol. Last week, we asked you, why are you using options? And over half, 54.2% of you chose income premium harvesting, 39.6% speculation, 6.3% protection or hedging, 0% for other, which is kind of surprising. This week, we have a twofer for you. Two guns loaded straight at you, listeners. First, kind of a silly one that came out of our Option Block show on Monday, which was, at the time, both Apple and Tesla we're trading around $170. So that means gun to your head. You got to pick one. Which one you buying, listeners? Apple or Tesla? I'll reveal the results in a second. And then also, as Q1 is drawing to a close, which market segment are you the most excited about for the rest of the year? Equities, crypto, volatility, or other? I know a lot of you are already writing in for other for treasuries. So there you go. Spare us your ignominy over the lack of treasuries. Whenever we put treasuries, it gets no votes. When we put other, people write in for treasuries. I don't know what that says, but that's what our audience does. Let's go around the horn. Let's go out to Uncle Mike first. Mr. Uncle Mike, sir, what's your pick, Apple or Tesla? And then B, what do you think our audience is picking? And C, what are you feeling for our audience in terms of equities, crypto, or vol? What excites them the most?
I think vol excites them the most. I guess I'll go in reverse order, somewhat. Apple versus Tesla. Apple is just, it's Apple. And I know it's not as innovative as it once was, but it's still Apple. And so long as it's Apple, it will always be Apple. Those are my prophetic words of the day. So long as it is Apple, it will always be Apple.
I was going to say, those are some deep words of wisdom, sir. Apple is Apple.
No doubt No doubt about that. And that's been my case for Apple for many years. It's Apple. So definitely would go with Apple over Tesla. And in terms of where I think the audience is picking on that, I think the audience is going to go with Tesla, honestly. So that is where I'm at.
Interesting. Apple will always be Apple, listeners, until it's not, says Uncle Mike. Going very deep on the show today. Mr. Flowmaster, same two questions for you. Where do you think our audience is lining up, Apple versus Tesla? And then also, what's exciting them right now? Equities, crypto, vol, or other, sir?
So I think that Apple would win. I mean, it feels like Tesla's. I mean, it's funny. They're both pretty kind of out of favor at the moment. Apple almost got to 200 and just couldn't make it, and it's back around 176, I think now. Tesla feels like the 171 in Apple. Tesla feels like they had this first mover advantage, and now you're seeing electric cars from dozens of makers out there on the road, and maybe Teslas are still better. I don't know, but they're not the only game in town. So I would say Apple is the winner. And then in terms of the asset class they're excited about, I'm probably going to say crypto. I mean, it's certainly having a moment.
It is indeed. Last but not least, Mr. Rock Lobster, same question for you. What asset class is exciting our audience, and where are they going, Apple versus Tesla?
I think from an asset class, I'm still going to go equities for our audience. Although the crypto I would say is second. I don't think volatility is exciting anybody. So crypto would be a close second. And as far as Apple versus Tesla, I think Apple's best days are behind it. It's just a utility at this point. Tesla has the innovation. So I would go Tesla over Apple this point. I would not have said that a couple of years ago, but Apple essentially hasn't done anything. I mean, they make a great phone. They have created this massive ecosystem, so it will be around. But unless they actually come up with something else to sort of change an industry like they've done before, I think it's basically just a company with really big revenue, but not a lot of growth.
Man, Rock Lobster throwing shade on Vol and on the fruit company. Let's see if he's right. Yeah. And he's wrong on both counts. Our audience loving Apple, 56.7%, 43.3% going for Tesla right now. And they're all giddy about Vol right now. 43.3% can't get enough Vol out there in the audience. 30% for crypto, 20% only for equities. Equities bringing up the rear, and then most of you on the treasury side, the Uncle Mike side, 6.7%. So Rock Lobster wrong on both counts as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode. No OB on Monday. I will be traveling, so this will be all the way till next Thursday. And Mr. Rock Lobster, that was kind of rough, so I'll give you a chance to redeem yourself now. What are you watching through the weekend all the way through till next week? And you know what? Let's do a combo because we're coming up against it. After that, where can folks go if they want more pick goodness in their lives?
I tell you, that was definitely a smackdown. I was a smack down. What am I watching? Can we finish the quarter green? I mean, you got kind of all-time records here. I thought we might get one of those little spikes at the end of the day as everybody jumps back in. So I'm still waiting for that. So end of day spike, I would say, maybe the last hour again. And then 888-TRADE-01 for Option Pit. You want to learn to trade options today, and tonight we're actually having a crypto. Greg Magadini is going to do stuff for Option Pit, so I'm excited about that because it's a thing that trades and moves a lot. So if you have that, you have some volatility numbers coming from this Amber data. It will be a fun event, and I'm actually going to try to learn something about crypto.
Complete bastard of a
even an old guy can learn something.
Complete bastard of a human being, that Greg Magadini. It's not like we create a whole show around his data or anything on Mondays that listeners should check out. Good stuff. He also was on the panel we did with the FLOWMASTER. He was debating point counterpoint with Henry. It was pretty intense. I had to separate them at one point.
He's a quality human. It's tough to duke it out with Henry. Henry brings the good goodies. He does.
He brings the thunder. And if they want good option pick goodies, where should they go, sir?
888-TRADE-01 to get 10% off anything if you mention the show.
There you go. And Mr. Uncle Mike, you performed a little bit better in our poll, so you got to go next. What are you keeping an eye on until next Thursday? No show on Monday. And then B, where should folks go if they want more Uncle Mike goodness outside of the Kane County Fairgrounds?
Oh, well, a couple things. With next Thursday, I'm going to actually make a more bold prediction right here, right now, on the last day of Q1, S&P 500, 6,000 by December 31st, 2025. That's going to be my bold prediction.
Wow, that's pretty bold. Since we're talking predictions, my producer is reminding me, I totally forgot. We have no vol views tomorrow, so we, in our infinite wisdom, picked vol for tomorrow. So I'm going to have you guys pick VIX for next week. Uncle Mike, where is VIX going to close on Friday of next week, sir? Go for it. Give me a number.
Well, that just messes up. That takes away the thunder from my bold S&P prediction.
It does. Right, I apologize, but go for it.
12.5 even.
All right. And then Mr. Flowmaster, last but not least, sir. First off, what are you watching until next Thursday? B, what is your VIX close for next Friday prognostication? And C, where should folks go if they want more CBOE goodies in their lives?
Okay, so for the rest of the day, actually, just on a side scanner, I set up a trigger to see when these big SPX blocks print because it's the quarter end. It's always exciting. Sometimes you get some big moves. I don't think we'll see a big move today. But, it is quarter end. And as we're talking about, you do get window dressing. You do get some funny stuff at the end of the day. So you never know. We got about 2 hours left. And then, we're up 10% year to date in the SPX, which is pretty good performance. I am a little nervous, certainly lightening up Delta where I can. And people can always come to CBOE.com/RMA, which stands for Risk and Market Analytics. Request a trial. We're always working on cool new things. I'm going to set up this Trade of the Week report to go to you and me every Thursday morning, so we don't have to dig through the Trade of the Day reports. And yes, someday I will actually get this into a commercialized form so that people can request it. We just don't have it yet. Too busy.
Cool stuff. CBOE.com/RMA is the place to go. That music, unfortunately, means we have to get on out of here. But don't worry if you're hanging out in the live on the pro side. We'll be back in a little bit to talk all things futures options and futures options vol as well, coming up on TWIFO. Then we're off tomorrow. Don't blame us. Blame the market holidays out there. So no vol views tomorrow. Like I said, we will cut together something fun for you folks on the vol views feed, so you won't be left hanging high and dry. Probably something on the feed for Monday as well, because there is no OB and no crypto on Monday. Maybe you'll get that fun chat that I had with the folks at CBOE over there down from FIA conference a couple of weeks ago. And some other fun stuff lurking for you. We'll have boot camp on the network at its usual appointed time next week. And then we're back again next Thursday for a live episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.